Hello, hello. Welcome to the closing bell on the 1st of Feb. Actually recording on the 31st, of course, on the Friday Arvo. Hope you had a good Aussie Day weekend. I went down to Wye River, managed to sit in the sun for 3 days, drinking beer out of an esky and burn myself to a crisp, but had an awesome time. And today I'm just going to have a look at gold and its relationship to, the US dollar, the gold oil ratio, the way that gold stocks rally, just to give you a bit of a sense of what may be coming. I think oil prices are looking a little bit dangerous to possibly sell off further. I've been umming and ahhing about oil for a while, and I showed you recently the oil price, but I'll show you again today and cover it off. I've got a bit to get through, so I'll jump to the charts pretty quick and cover off the idea that we may still be in the early stages, especially for the little microcap or smaller gold stocks. There might be a few opportunities out there if this gold oil ratio really starts to take off. So let's jump to the charts. Okay, so on this one, I'm just kicking off with looking at the US dollar over the very long term, going back to 1995, so that we can get this sense of, the relationship between gold and the US dollar, of course. When the US dollar's rallying, often gold is under pressure. When the US dollar's selling off, gold prices often tending higher, just because things priced in US dollars. So you can see over the long term a bit of a sense of what's gone on with period 97 to 2001. See that US dollar not really flying higher up into 2001, and gold not really going anywhere. It had decades really of going nowhere. Then this period here, US dollar getting hammered, and you see that's where that gold price really took off from, when the UK sold all their gold, well done, and then that huge run. So just to give you that sense over time, US dollar rallying from 2011 up into 2017, and the gold price having that large correction into that period, and again really sideways to down on the US dollar and the gold price rallying. But then this is where things get interesting, where we had that big run in the US dollar up into 2023. The gold really didn't come off, did it? It had a bit of a sell-off, but really stuck in there pretty well. It went sideways. So that's a bit of a sense of the strength of underlying demand for gold. And now we're in this period where we've got US dollar rallying and gold prices taking off, running. So that's really a sort of a breakdown of that very long-term, idea. It's never one-to-one, but you can see there's sort of big themes through there. And just to give you that sense of just how strong this demand for gold is, especially just that final period where you've got, gold prices really holding in there. And now with that US dollar starting to fly and gold prices really breaking out to new all-time highs, is that a hint that the demand for gold is really strong, that we're just in the early stages of the move? So that's one thing to think about, is just how interesting it is that, US dollars being very strong, but that gold price breaking out to new highs and really just ignoring the strength in the US dollar. And then if we just consider what oil prices are doing, and this is Brent crude oil going back again a long time, and I have shown people this before, but if you're new, we had this rally 1999 up to about 2008, that huge run in oil prices. I'm really analysing all the data since then based on that wave. with the midpoint, that point of control, being so important. I'll only just do it up to there. And then we've got those buy and sell zones. So we've got the side, the wave, we split that in half, then we split it in half again, and then split that in half again. And then you've got the buy zone of that area, and on the top side, you've got the sell zone of that area. And you can see over time, it really has been pretty good at picking out these major reversals and then moves back to the point of control. Then the rally into the sell zone, back to the point of control, down to the buy zone, back to the point of control again, and then it fell over again to the buy zone, back to the point of control, and then we've got this another wave and back to the point of control. So that's sort of what's been going on for decades in oil, and that's why it's so interesting where it is, the fact that it is creating this range around that point of control. So really market trying to sense, are we going to see support in this area and then finally take off again, back to the upside above $100? Or are we going to see this area fail once again and it's a tip over back down into that buy zone area? And this is why it is sort of intriguing to watch what it's doing, because it's been in this range for quite a while. And if we go up close to what's been happening just recently, the fact is it is still in long-term downtrend. So just based on the 10-month exponential, 20-month simple, and that has been pretty good at picking out those large long-term trends. It is still quite weak, despite the fact it's been finding support, at that sort of level down around $70. But it really is stuck in this range and still finding selling pressure. And just recently, it's retested the long-term moving averages. So, when it's rallying, I'm looking at that 20-month moving average as a point where, often it will, if it's going down, we'll go back to retest those longer-term moving averages. So, and if it's weak, get rejected and then continue down. So in this case, we're looking at that 20-month moving average. It's tried to rally, but no, the selling pressure's there. Back to the 20-month again, selling pressure's there. Back to the 20-month again, selling pressure's there. So the point being that it's tried to rally recently. It nearly created the monthly buy pivot this month. It was up around over $80, but by the end of the month, it's been hammered, and it's sold off to below the 10-month exponential, and it's also below that high of the lowest price candle there. So that's where the monthly buy pivot would be created. So everything's just saying, well, the selling pressure is still about. So you've got to be wary. And we do know that there's dominoes lined up not far below here, around that $70, which has been the low for the past few years. If it has another quick crack at that level, it could break. And that's when you could see quite a serious sell-off, because there's been so many positions put on in this area. So there'll be a lot of stop losses, as I've said before, probably below that area. And just if you look at the trends that we've seen, when you've had a really strong trend like that, when it does break, there's not necessarily a lot of technical support or levels. And it is, as I said, still all in downtrend. It's finding resistance where you'd expect. So another crack at that $70 region, and with Trump drill baby drill and wants to put pressure on Russia, putting pressure on Saudi Arabia, maybe we need to see a flush out. And look, for sure, happy to then say maybe the long term is fabulous, and that could be an awesome opportunity, as it has been, so many times in the past, down around that level. And I do still think oil long term will be needed, of course, and the rumours of the death of oil and gas, I think, are very premature. So that's sort of how I'm seeing it. And if we do see that, if oil prices really do collapse, then that feeds into the gold oil ratio, as I've been talking about. So this is the long-term gold oil ratio, again, going back a few decades. And then we've got the TSX gold index, and also the ASX gold index, to give you a sense of how gold stocks actually move within all of this. And just note the moves when gold's really rallying and maybe oil's selling off, and you get those big spikes in the gold oil ratio, which helps because all your costs, if your gold price is going up but your costs are going down, there's lots of need for fuel moving around gold and tracking it off to places and what have you. That gold oil ratio, when gold prices are going up and oil prices going down, is increasing margins on these companies, especially the little ones. Really helps out, and it can just be can inspire the buying in the gold stocks. So if we see that gold oil ratio really taking off, and there's a nice big run in gold stocks there. We had the gold oil ratio coming back off, big sell-off through the gold stocks, gold oil ratio taking off, and a nice big bump in those gold stocks. Selling off again, not much love. And then taking off to the upside again, nice big run in the gold stocks. And so here we are again, that gold oil ratio leading to a bit of doldrums for gold stocks, really lagging the gold price, if anything. And now, is this about to spike higher if the oil price really collapses and gold continues marching higher at a rate of knots? So we may be still in the early stages of a nice uplift in these gold stocks. So that's just to say, no need to run away from your positions if you're long gold and happy. I've taken a bit of profits off, but I'm letting quite a lot of gold positions run. And this was really just to inspire you that, look, we may still be in the early stages of a nice, solid run in these gold stocks. That's enough for today. I shall come back with more next week. Cheers.